Alright guys, so I want to make this video. This is going to be going over a Heloc. Heloc is a home equity line of credit. And guys, I was able to obtain funding for my new project with the equity in my current residence. One of my videos, I talk about the importance of having a relationship at your local community bank. Whether it's one or a few, I like to obtain a relationship with a few. I just got mine from Main Street Community Bank. It's locally in Florida. And like I said before, you're able to obtain a relationship with higher ups in the bank. Things are being able to be processed faster, and that way I'm able to move at a faster pace. I'm not worried about these big banks with their requirements and all these documents and what have you. So in this video, I just basically want to break down the steps on how to obtain a Heloc or a home equity line of credit. Simply guys, like I said before, you can go to a main bank, you can go to a credit union, but I do recommend community banks. Less requirements, less steps to take, faster processing, and you're dealing with a personal banker who's personally working on this for you versus in a big bank, you know, they have a bunch of people processing this for you. So simple enough guys, you know, find a local community bank. Obviously make sure you know what your value of your home is, because if you purchase your home for $300,000 and it's worth $310,000, you're not going to get anything, right? You have to make sure you have equity in your property. But so step number one, right? We want to make sure that we have equity in our property. So you can go on Zillow, you can go on Realtor.com, you can type in your address, and they're going to give you, Zillow calls it a Zestimate, right? They give you a rough ballpark of what your house will be worth, and sometimes the banks use that. They don't send out an appraisal, they do a desktop appraisal. And what a desktop appraisal is they simply go on Zillow, they go on these websites, and they look at comps and they figure out what the property is worth. In this case, I did order an appraisal through Main Street, but they did give me a credit for it, so they paid for it. As long as you obtain the loan and you sign off on it, they give you that credit against that appraisal fee, which was $450. Also, you want to make sure that your credit is good, okay? I didn't ask what the credit requirements are, but you know, you want to be 650, 680. Mine's over at 700, so that's why I really don't have no issues obtaining these type of loans. That is one step. You want to make sure that your credit is good, right? You want to make sure you have equity. You want to make sure your credit is good. Now you go to the community bank and you obviously put in an application for this Heloc or this home equity line of credit. The application's real simple, guys. It's just your basic information, social security, date of birth, name, address, what have you. And then you also want to put your employment, right? So you want to make sure that your employment income is on there accurately, right? Whether you have rental income, whether you have any other type of income coming in outside of your primary job. If you're a W-2 employee, real simple, right? You just give me your pay stubs, your tax returns. For businesses and people who are self-employed, like myself, I had to give them 2 years tax returns so they can see where my income is at. From there, they determine if you can afford that loan, right? They want to make sure that on top of your regular mortgage, because it's going to be a second mortgage against your property, a second lien, they want to make sure you can afford it. So on top of your mortgage, with this new payment, if you're able to take out all the money, because it is a line of credit, so I want to explain to you guys the difference. With a loan, you know, they just give you that lump sum of a loan, and then you can just, you're paying interest on it, the payments are due within 30 days, and you're paying that every month. The great thing about a line of credit is you don't have to pull it out right away. That money's sitting there. Once I pull out, let's just say I got a $70,000 line of credit. Let's just say I pulled out $10,000. I'm only paying interest on that $10,000, and if I pay it back or pay off that $10,000, whatever I did with that money, now I'm not paying interest on it. Simple interest, all right? But let's just say I pull out $10,000. I'm paying my 4 1/4 interest on that. But let's just say I pull out another $10,000. Now I'm paying 4 1/4 on $20,000, right? And if I pull out the whole $70K and so forth. The good thing about the home equity line of credit, most of them do this, is they have a 20-year payment schedule. So in the 20-year payment schedule, that means you have a lower payment, which is great, right? Because it gives you more room, more wiggle room to flip that money, whatever you're doing. Like what I'm doing is I'm building a home with it. So I'm able to, within a year, pay that 4 1/4 on that money, but I'm able to pay it back and then it's done, right? But with the lower payment, it gives me more flexibility. While I'm paying it on a 20-year schedule, versus a 1 year, 2 year where I have a ridiculous payment. Now I'm trying to use the $70,000 to flip it, but now I have to turn around and make these big payments. Not the case with a home equity line of credit. Most of them do a 20-year schedule, some do a 30-year schedule. And I have 10 years to take all that money out, utilize it, or pay it back, whatever. But I have that line of credit, and let's just say I use it to build this home, I make my profit, I pay it off, and then another opportunity arises, I'm able to move on it because I have this line of credit. That's another good thing about the home equity line of credit. So like I said before, right, step one, make sure you have equity, make sure your credit's good, make sure your income is there, right? And then you just go, you submit this credit application. From there, they do an appraisal. They appraise your home. My house appraisal came back at $347. Most of them are gonna lend you 70 to 80% of what your home value is, minus your mortgage, right? So for example, I'm gonna give you guys my numbers. Main Street lends 75% of the value of the home, up to, right? 75% of 347,000 is 260,000. I owe 190. That's where we get the difference, right? So you subtract my 190 from that 260, you get $70,000, and that's where I obtain my home equity line of credit. Some banks give 80, some give 70, but you're looking at 70 to 80% of the value. Now, if you need more money, you're gonna want to go to a bank that gives a higher percentage of the value of the home, right? But this is roughly what I needed. Worked out perfect to get started on the construction of the home and get this finalized. But yeah, that's pretty much it, guys. Step one, right? Make sure you have equity in your home. Step two, make sure your credit's good. And then you want to find a community bank, get the requirements, make sure you fit the requirements, right? You want to make sure your credit is good. That's a big one. But you know, if you have a house, most likely your credit is good, decent. And then you just go submit the application and you go through the process. The appraisal comes back. It's relatively fast with the community bank. And that's it. That's how you obtain a home equity line of credit. And I hope you guys like, subscribe, share. If this information helps you, leave a comment below if you have any questions.